And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Welcome to the Market Forecast. Today is Monday, January the 10th, the second week of the trading year. As always, we're going to be looking for good context, risk management, and always thinking about patience. I'm John Hoagland. Thanks for trusting me with your time. As far as economic numbers this morning, nothing really all that impactful due out today. 9 o'clock preliminary wholesale inventories due out. We do have lots more information coming out this week. Just to review what we've got coming. Tuesday, we've got the Red Book. We've got a couple of Fed speakers. That's tomorrow. Nothing all that impactful except for, 9 p.m. Central Time, Jay Powell is speaking. Wednesday, the CPI numbers come out at 7:30. We've got a lot of inflation numbers coming out this week. CPI 7:30, EIA, Petroleum Status Report, as well as always on Wednesday at 9:30. We've got the Beige Book coming out at 2 o'clock, which means 2 weeks until the next Fed announcement. Thursday night at 7:30 Central Time, jobless claims and PPI final demand. That's going to be a big one. EIA Petroleum Status Report, 9:30 on Thursday. We also have a couple more talking Feds. We have Lael Brainerd speaking at 9, and then we have Charles Evans speaking at noon. And then Friday, the big one is going to be retail sales at 8:30, import-export prices at 8:30, industrial production at 8:15, 7:30, I should say, for retail sales and import-export prices. Sometimes I don't even know what I'm saying. Business inventories at 9 o'clock, as well as University of Michigan sentiment due out at 9 o'clock on Friday. One note that's not on most economic calendars is the fact that we have the crop production at 11 p.m. Central on Wednesday. So if you're going to be trading grains, you're going to need to be flat for that number if you're in step 2 or in a funded account. Lots of important information coming out again on Wednesday, 11 o'clock Central, crop production for you grain traders. This morning, U.S. stocks seem to be continuing downside momentum that was created last week. We've got more inflation numbers coming out later in the week. We are also going to be starting fourth quarter earnings the end of this week with a couple of our bigger banks. So they're starting with the banking sector this Friday. Bond yields continue to rise. Crude prices have eased a little bit as Middle Eastern output disruptions have eased. Goldman has updated their forecast for the number of rate hikes that we could see this year. They've gone from 3 rate hikes to 4. I wonder if we're going to see any action in about 2 weeks at the FOMC meeting. As usual, the VIX dollar index and the 10-year yield we checked before the open here. We've got the VIX up about 12%, 21. We got the VIX creeping up there as these equity markets continue to leak towards changes of market state. A dollar index up slightly at 95.98, and the 10-year yield up again at 1.78. I'm going to say good morning to everybody. Good morning, Brian. First in the room. You win the prize. Jimmy Decker's so close, almost there. You'll get it tomorrow, I'm sure, Jimmy. Vince, good morning. Theo, George, Jim, Zerain, Chris, Lacey says good morning back to you. Alfred, George, Three Lions Insight, Robert Kennedy, good morning. Ricardo, Sean, Sarah, good morning. Charles March, Terry King, Brody, good morning. Mo, Alhaji, good morning. Mirik, Ryan, Christo, Rob, Rick, my brother, love you. Kevin and Juan. So we've got our challenges in front of us this week. A lot of the more important numbers and more important speakers coming out later on in the week, except for, of course, Tuesday with Jay Powell speaking. I'm going to be looking to manage my expectations early this week, as a lot of this information is going to be impactful, and a lot of traders will be looking for and waiting for that information. So my first thought this week is take it easy, manage your expectations. Bigger opportunities are likely to come later on in the week. The Top Step Foundation starts today. These are somewhat similar to the classes, I guess you could call them, that I put out live in September as kind of a go get back to school kind of thing. They are improved. They are a little deeper information, but it's 4 weeks, Monday through Thursday, starting at 12:30, usually going to be ending around 1:15, 1:30. That's going to step a little bit on group coaching, which is usually at 1 o'clock. We're going to have to start that a little bit later. Here's the link for the group coaching as well. So that first link is for the Top Step Trading Foundation. The second link is for group coaching. And again, we're going to have to push group coaching off a little bit later in the afternoon, usually starting at 1 o'clock, more like 1:15 to 1:30, but we will still be presenting the group coaching sessions. So if you have questions, bring them. We got a lot of signups for Top Step Foundation, which I'm very excited about. This is, I think, tremendous. We start slow. We start with the basics, the history of futures trading. If you're wondering how any of this is going to help you, I think it's very important to know where the markets came from, to know why they were created, why they're still so important in the world, and really what our role is in them. So we're going to be looking a little bit at that stuff this afternoon at 12:30 again. I try to make it as entertaining as informative, and I look forward to seeing as many of you there as can make it. Eventually, they will become content that will be available to at some degree on the website. So, yes, they will. Charles just saying that they will be. Those videos will be available later if you can't watch live. It may take a few days for us to get that set up for everybody, but we are planning on continuing to have that information available to everyone. So really looking forward to that, really excited about it. We got really good positive signups for that. So I'm again really looking forward to it starting again today. All right. Speaking of today, we've got some business to do here. We're looking at the S&Ps first here, so we can watch the open in the crude oil. Maybe we should be watching the open in natural gas. Natural gas looks like a very interesting market this morning, and we will see that in the charts here very shortly. So I'm going to jump into the S&Ps. Those charts coming up right now. All right, so we had our rangy high here. We were all wondering whether we were going to continue to move higher or if we were going to come off of this, and obviously we've come off of this. Volume has slowed a little bit as of Friday. That's usually going to be typical. We added 5,400 in estimated open interest. So 1, 2, 3, 4, 5 days now with lower highs and lower lows. This market is one time framing lower. There was a rally that was attempted on Friday that, well, not really. So we are one time framing lower. I do not want to fight this market. We do have the weekly kickoff low, which is 46.28 even, just down below here, and we look to be perhaps looking for a test of that. I'm looking at that as more of a potential pivotal area. And knowing that there's a lot of data new that due this week, I'm going to really be trying to manage expectations before. So I'm not really looking for any huge moves without any unknown headline risks coming into the marketplace, coming into the information that we are doing, that we are looking at, that we are using for our opportunities. So I think we may see some hedging going on, some jockeying for positions as the information as the week goes on grows with importance. The 30-minute chart here. All right, so we've been pretty organized off the high here. We haven't left any gaps. We have left one or two naked points of control at the highs here. Those will come into play as the market will eventually return and continue moving higher. Overnight inventory to the short side. Looks like we're going to be opening with a gap. So if we can't close that gap relatively early, a test of weekly kickoff low would be not too far off, which would offer opportunities for us to manage risk. There's a naked point of control that the market is currently using as support. We're waiting for the regular trading hours to open up. Now, what does it mean when the market opens up with a gap? The market opens up with a gap. It's out of balance, out of the previous day's range, and a bigger opportunity may come, and that opportunity may come earlier in the session. What we're looking for is, if we are a short time frame trader who is currently short, we're looking for longer time frame traders and regular trading hours to continue to push this market lower. They may have a little bit of a stumbling block here with weekly kickoff low. Again, that weekly kickoff low, 46.28 even. But if we don't see longer time frame traders come in and continue to push price lower, eventually we may see an inventory inventory adjustment that could close the gap or bring price back closer to settlement. When we take a look at where the market opened last night, it was right about here. A lot of our inventory, a lot of our volume has been presenting below that level, which tells us that our direct competitors, our other short time frame traders, weaker hands, day traders might be holding shorts here. So we watch the opening range. If the opening range is left at the low of the session, that could be an indication of an early inventory adjustment. An inventory adjustment can offer an opportunity, but in the current market situation, I'm not going to fall in love with it. I'm going to take a 2 or a 3-to-1 reward over risk on that trade. And then I'm going to watch and see what happens, because as this market is one time framing lower, we don't want to try and fight that. Where does it break? Where does this market state break? If we can't take out weekly kickoff low, we take out Friday's high, that could be the first kind of straw on the camel's back that breaks this downside short time frame structure that we've got, one time framing us lower. All right, take a look now into the crude oil, because we're just about to open and we can watch that first minute of trade, though I don't think it's going to be necessarily all that important for us to see it. Volume was lower on Friday. It makes sense. Fridays, tend to do that. We added 5,400 in open interest on this move to the downside. We have supply issues on the back burner now, as those disruptions in the Middle East seem to have eased. We don't know what's going to happen. Of course, the the Middle East is always an area where pretty much anything can happen. So, of course, we're going to be keeping our eyes and ears on the news. Let's take a look at the 30-minute chart. We'll watch the opening range here shortly. Naked points of control here, naked point of control below. Seems somewhat pivotal for us. It looks like we've left. No, we don't have any kind of a gap here. What are we looking at as far as overnight inventory is concerned? Relatively mixed. Overnight mixed shorts. The market opened up here, looked lower, looked higher, looked lower. It's really kind of coming back into range, into value and near settlement, which tells me that there may be, an opportunity for us to try and be patient and wait for opportunities as the day goes on. There's many visuals below. We've got lots of points of control. 1, 2, 3 before we get to weekly kickoff low, which is 75.80. We've got weekly kickoff high, which is up at 82. Not as many visuals. Basically, this is the only one, and it's below price. So let's watch that first minute here. Let's see if we got any opportunity here. First minute. No, it's not presenting it for me here. Well, here's the first minute right here. So that first minute is the first minute of trade is the opening range. Opening range is a term that comes from the trading pit. There was orders that were in the hands of brokers that were due fills right on the open. If there was a lot of business to be done, sometimes the opening range could take 5 minutes to establish itself and be a very wide range. If there was not a lot to do, the opening range could be just a few trades and just a couple of trading and just a couple of tick range. This morning, our opening range is 78.61 to 78.77, a 16 tick opening range, which has been penetrated to the downside, but did not find directional activity. What did we say when we were looking at the 30-minute chart? There's no real reason to be in any big rush to get into anything because the market is really largely in range and inside value. So there's a little change in the perception of value of a barrel of crude oil right now. So I'm not going to be jumping into anything, even though the opening range has been the high of the session. I can limit risk if price comes back into the opening range, and I can take that trade because it's going to cost me even less, which might actually be the play for us today. If we can make that trade so cheap that it doesn't really matter, why not take the trade? Jordan, your market profile. I prefer to look at regular trading hours for the majority of my trading decisions, but I do like to have an extended trading hour profile on just so I can see half back, points of control, and ends of ranges. All right. Simon, how can you tell whether they're longer time frame traders, shorter or over short time frame traders? Well, Simon, when we're looking at the opening range, and I'm going to move on here, and we can talk about this as we continue moving through these charts, Simon. So the Nasdaq tech sector is certainly presenting as weaker than the broader market. Other time frame market, don't fight it. 1, 2, 3, 4 real days of one time framing to the downside. Boy, that's been difficult for me to say this morning. I apologize. The weekly kickoff low is pivotal. We're below it. It's the swing low here from the 20th. There's plenty of space down below. We've got a little bit of a hiccup here, but if this market decides to grow legs, it is more than welcome to do so. And again, I caution you, in a one-time framing market, you do not want to fight In other words, you're going to be really cautious if you're looking for any kind of longs in a market that continues to put in lower highs and lower lows on the daily chart. Okay, the weekly kickoff pivotal, we're already below it. This market again presenting weaker than the broader market. Okay, so how can we tell if we're looking at longer time frame or shorter time frame traders? One way we can tell is we have volume. Okay, this is the range. This is the regular trading hour session on Friday in the Nasdaq. So we've got 8:30 till 3 o'clock. Notice how much more volume is here. Notice how little volume is here. With that little bit of volume that we see in the Nasdaq when the market is technically in extended trading hours, not regular trading hours, we can then assume that the overnight traders, the traders that are trading outside of regular trading hours, have a higher probability of being shorter time frame, weaker hands traders. Now, when we get into the teeth of the day, Simon, a lot of it is volume and open interest. Now, we're going to be talking about that stuff in the Top Step Trading Foundation classes. It's a couple of days or within a couple of weeks where we start talking about volume and open interest and how to use those to determine or at least to hypothesize. We never really know, Simon, but we can hypothesize as to who we believe is in the marketplace. And there are secrets in the daytime frame that we're going to touch on as well in Top Step Trading Foundation. So I'm looking forward to seeing a lot of you there. It's going to be me, and we're going to have JD, and we are going to have Jack helping by answering questions, because there's a lot of people that have signed up. We're looking forward to spending time. I mean, if there's one thing that I'm passionate about as far as business is concerned, it's futures trading, and something that I truly enjoy, something I truly believe that more people can be successful at, and something I believe that I can help with. So I'm looking forward to it. Okay, so now overnight inventory. The overnight market opened right here. So we started getting too long in short time frame. Price was moving higher. We adjusted that inventory. You can see how the market got too long. We decided we were done, came right back to where it started. Now with the momentum and the move below weekly kickoff low, we've got some shorts in this market, some probably shorter time frame, maybe even some longer time frame traders, because we can see that the volume has spiked up a little bit here at 6:30. All right, we're not open for another 20 minutes here. We're starting to see a little bit more volume come in. That can be indicative of more eyeballs noticing this. Okay. All right. So the NASDAQ opening with a gap outside of range and value on the other side of an important inflection level. Now, are we short enough to where we can pull this market back to test with this weekly kickoff high? I would relish that opportunity. We've got last week's low. We've got Friday's low. We've got a weekly kickoff level. I would think that there might be some fish here. If we can throw that lure in the right time in the right place, we might be able to catch some fish in this area here. If the market never gives us that opportunity, if it continues to push lower, it's going to make our job a little bit harder to try and get into this move. To try and catch this move in its move to the downside. One of the other things that we might be touching base on in Top Step Trading Foundation. I'm going to try and watch maybe the opening range in the S&Ps and in the NASDAQ, see if the opening range gives us an early opportunity. If that opportunity is to the long side, I'm going to treat that as a fast trade. I'm going to take 2 or 3 to 1, the reward over risk, and I'm going to be happy with that and move on. If we get a push to the downside and the opening range remains the low of the session and we see some positive delta, we see some momentum to the downside, that may be a trade I would hold on to for a little bit longer. We do have to remember in all of these markets, when we have directional activity like this, there's going to come a point where all the sellers are going to be in and everybody's going to turn around and say, whoops, and we're going to get our face rip and rally to the upside. It does not change the market state if that happens. You just have to be aware of it. So always look for levels, short time frame, long time frame, whatever levels that you see that you would trade against to limit risk in anything we do. Always limit risk. All right, so gold. Open interest jumped about 5,000 on Friday, off a weekly kickoff low that was seriously tested. This was a 730 knee jerk that was really rejected in the market. It actually, ended up resolving higher on higher open interest but lower volume. Short time frame downside structure, lower highs, lower lows, longer time frame balance. We've been stuck in this area since July. Overall, a large area, great opportunities, but we're still right here in the middle of it. Take a look at the 30-minute chart. Okay, so settlement. Always be putting settlement on your charts. 1797.40. We've got some overnight shorts that have adjusted. We got a little too long that have adjusted. We're right in the middle of value. We're right in the middle of range. We do have a weekly kickoff level just below that could offer us some opportunities. But because, again, we've opened in range and value, I'm suggesting try and stay patient. Watch that first hour. The initial balance is the first hour of trade. It gives at least some sort of reference or extremes with which to be able to limit risk in the day time frame. Take your time getting into gold today. I don't think that there's any real rush. Euro. All I can say for the most part is Eon. We've been very tightly wrapped here. We've been consolidating since the middle of December, it seems. End of December. End of November. We've just been back and forth and back and forth. That balance does remain. We added 2,800 in open interest on the upside Friday. Look at what we're doing today. We're taking all that back. Short time frame control, short time frame control, short time frame control. There's no major players. We did add 2,800 in open interest, but we've been making and losing open interest remaining pretty much the same. Look at how short the overnight inventory is in this market. We've got settlement price and 113.78. All of the overnight activity has been to the downside. We've spanned Friday's large range almost 100%. We've got the opening below value. We've got sellers continuing to push into this market, but remember the quality of traders or remember the quality of sellers that we're looking at. Pretty decent volume on that open, but where have we been? We've been here. Are we getting a little cheap? Remember, when we're looking at trading areas of balance, we're focusing on the extremes. The extremes of balance offer opportunities for us to buy it when it's been presenting as too cheap and to have the market return back to the center or get a nice return to the upper extreme. Are we getting pretty close to the lower extreme? It looks that way. We've got last week's low right here. Look at how this market has been respecting short time frame levels. The low Friday was value low from the previous day. The Thursday was pretty close to the value low from the previous day. This day's low, regular trading hour session we're talking here, was relatively close to the value area high from the previous day. This high and low, this put in the low for the week. It was the lowest level we'd seen for a while. And then we put in a high up here. Was that respectful of value? Well, value is overlapping to maybe a little bit lower, but in large part, the same value. Here we have a day that opens inside value, inside range, puts in the high of the week and drives lower. We've left a naked point of control up here that was a settlement that has not been checked. What is this looking like? A little bit. Now we've taken out the previous day's low. That's a big difference. We're trading down to the previous day's settlement price. That's a difference. What about Thursday's low for a potential opportunity? What about value low from last Tuesday? The way this market has been respecting those short time frame levels, that's the only thing that I'm going to be using to be able to limit my risk. And I'm not even probably going to be doing anything in that market today. 10-year. We sent a warning shot over the bow last week on Friday because we've got, let's see here, 5 days. 5 days. Real strong downside, one-time framing activity. We never did see our face rip and rally. The market just continues to get buried to the downside. We lost 9,200 in open interest off of the weekly kickoff low here from this week. And we've got a true test of it so far in regular trading hours of weekly kickoff low. And just to be sure, 127.29 is weekly kickoff low. We traded down to 127 and 30 seconds prior to the open. It looks like we're testing that now. What are we looking at here? Pretty good volume on that bounce off that area low on Friday. I do believe that at some point we did see a degree of short covering for the weekend on Friday. Let's take a look at the 30-minute chart so we can see that. Look at the way this market has been moving. It's dropping, consolidating, dropping, consolidating, dropping, consolidating, dropping, and consolidating. But that move off the low on Friday was the biggest rally we'd seen all week. I think there was a little bit of short covering in that. What does it mean for us today? Settlement is pretty much our high. Our overnight high is point of control. We got too short here way too early. The European session came in, said, whoa, Nelly. Took us right back to settlement. This is very typical of overnight inventory adjustment. We get too short in the hole. Those shorts bring price right back to settlement. Are we getting too short again now? We're in regular trading hours. Our overnight longs they didn't wait around for the U.S. trading hours traders to push this market lower. Weekly kickoff low, a definite pivotal area. We saw it tested in the overnight. We're looking at another potential test of it now. There's fish here. At the very least, we may lose a worm, but we're not going to lose much because we have the weekly kickoff level with which to lean on. Net gas, fascinating. We gapped lower. We did close that gap, but now we've gapped higher again. Is this island low-ish? Island reversal pattern-ish? Got another weekend gap the other direction. Weekly kickoff high, $44.07. $4.07. $4.08. We are holding, at least for now, this gap and this weekly kickoff level. We added 5,200 in open interest on decent volume on a move that put in the high of the week last week. What does it look like on the 30-minute chart? So is this all longs? No. I would say our overnight inventory is mixed. We got to look at where the overnight started. If we had activity all the way up here, I'd be looking at a lot of overnight longs, but we don't have that. We probably got some shorts that are really stressed out right now. They didn't have the opportunity to get out. There are no overnight longs or overnight shorts. We're going to be looking to create our initial balance. We are opening out of range. We do have a gap. Gap rules apply. And, there's opportunity early in the session here. But if we don't catch that early opportunity, we wait for the initial balance to establish itself to create some sort of reference and ranges with which to be able to lean on. I think there's probably fish right around weekly kickoff high here, $4.07. At least we've got an old friend. Got an old friend with us today, the Rational Investor. It's good to see you, Mr. Beamish. Yeah, you guys got a couple of old friends. Haven't seen each other in a while. It's always good to see. My pleasure, TFF. I have no interest in being the president, though, folks. I'm sorry to tell you, that's a job that's above my pay grade, or below, whichever one you think. Stephen, yeah, for opening range is the first minute. Some people actually use a 30-second opening range. I appreciate you too, Jimmy. I appreciate all of you. Looking forward to seeing everybody to this afternoon, to 12:30. The history of futures trading. We're starting off at the very basics. By the end of this, I think you'll see that there's a lot of information, at least I hope there's a lot of information that you can use to help you in your daily trading activities. Wow, in Brazil, Robson. Yep, that's true. We can't speak about the big fat round numbers without thinking of you, Beamish. It's good to see you. Good to see you. Vince, always a pleasure. I'll talk to you soon. All right, let's get ready. Stay humble, grateful, and creative today. Take your deep breath. It's only Monday. We have plenty of opportunities come down the pipe. Make sure you be patient and let them come to you. I'll meet you in the proverbial trading pit in a couple of minutes. I'm going to run down there right now. Trade well today. I will see you all this afternoon. Have a great early session. See you later. Here's the trading foundations, Mr. Beamish. There's the link. Hope to see you there.